Hello, folks, and welcome to your Onchain update for the 11th of November. What an absolute shit show. This is the fall of FTX is a pretty nasty event, probably one of the worst that's happened in this industry's history. As far as I can tell, it's just outright fraud. This bloke's a crook as far as you can throw him. So it's a shocking event, and the shocking part to me is not that it happened, because as I've said before, I've never been a SBF fan. There was always something that didn't quite smell right. I also didn't look into it, so there's that. But I'm kind of not surprised to see it. What I'm surprised about is just how quickly it happened. I mean, it was 24 hours, 48 hours at most from top to bottom. It was dramatic, and it's tough when you go back and look at all the red flags that existed, of which I can name many, but this is just the reality we're in, and I just kind of want to discuss. Well, I want to take you through a bunch of dashboards, and I don't know how long this video will go through. I'll just kind of go through everything that's on my mind. And then at the very end, we'll just touch on some of the implications of what this may mean. But anyway, let's just jump straight into it. So what I want to do is just very quickly. We did do a video at Glassnode that covers this. I actually won't spend too much time on this dashboard because I think that all of it's contained in that video. But if you are interested, I would recommend jumping on that. There's a video called "The Fall of the FTX Empire" by Glassnode. It's essentially me going through this dashboard. But if you want the high-level view, this blue curve here is all of the funds that were flowing into FTX. The blue area is Alameda's portion of it. The purple version is Alameda and FTX. When you look at this, the blue and the purple is Alameda, FTX, Binance. In short, Alameda it appears to be the primary counterparty moving funds between Binance and FTX. They were the primary depositor at FTX. It looks like they were trading against their customers. It looks like they were trading against their customers with their own customers' funds. It looks like they were taking their customers' funds and redeploying that elsewhere, and they blew up. And I mean, this is just outright fraud. There's not even words to describe how much this guy deserves to absolutely get buried by the legal system. It's pretty horrific what he's done, and a lot of people got hurt by it. And for anyone who was hurt by it, a huge sorry. It's such a shitty thing to happen. Nobody deserves this to happen. This industry has to learn these lessons. We have to go through these cycles. There's lots of takes on this. There's no question that I certainly feel very frustrated as a Bitcoiner who's incentivized and told people self-custody and try and avoid the just complete and total Ponzi scams and shit coins and all these things that just are. We can all stand here in hindsight and look at the industry and go, yeah, okay, maybe we did get a bit over exuberant, but this is primarily why I vote with my money, and it's not on Luna or FTT and or any of this other stuff because it's not the world that I want to see. Sadly, it's not really the way the world works. But anyway, look, again, I don't want to spend too much time on this dashboard. I think the key thing to really pay attention to is just how much. I mean, this thing was like 24 hours. Their stablecoin balance went from 800 million to zero. Their FTT balance, I mean, we saw this massive uplift here at FTT. This looks like they were basically putting more collateral in, using collateral which was of the exchange. I mean, the whole thing's just an absolute circus. Balance on exchanges, Bitcoin has basically gone down to zero from the wallets that we track. Ethereum has gone to zero. The whole thing's a complete and total mess. I mean, FTX is absolutely fundamentally bankrupt. There's nothing there. It's gone. It appears that all their wallets are gone. They're empty. Alameda is still hitting the buy and sell button somewhere. You can still see on-chain transactions. I mean, these guys are just absolute crooks. They belong behind bars for a very, very long time. Now, what's probably more relevant? FTX is gone, right? Let's remove that from the whole system. What's going on elsewhere, right? We're going to look at this from a few angles. One is the exchanges side. I just want to see what people are doing with their coins. I want to look at the stablecoin side because that's going to be an important element moving forward. Spending behavior, profit and loss, capitulation, what's the deal with this wick? And then long-term holders, right? What are the hodlers up to? That's kind of the big categories we're going to look at. So let's just kind of go through these one by one. So on the exchange front, I mean, not that it should really surprise anyone, but we're seeing massive outflows across the board. This is not FTX. This is post-FTX. We're seeing massive exchange withdrawals. We're seeing it across Binance. We're seeing it across Coinbase. We're seeing it across, not quite on Bitfinex. FTX is obviously empty, so that's happening there. But these are coins that are coming out of exchanges. Now, I mean, look, the world's and this market thing is in an absolute. It's going to take a long time for this to recover. So to see people self-custodying, that's, as much as Bitcoin may be as simple as it is, you're not withdrawing coins to sell them on a DEX or put them in a liquidity pool. So these coins are getting sucked out of exchanges. They're going into investor wallets, right? So they're not being sold, they're being pulled out. So there's something to be said about that the self-custody thing is there. And I really do believe that there's going to be a rotation back towards BTC. I'll touch on the implications, what I think is coming at the end. I might just leave that. Sorry, there's a lot to go on. And obviously, this is a really frustrating situation. And you can probably hear it in my voice that stuff like this it's so frustrating to see because it doesn't need to be this way. But this is kind of the world that we're in. But anyway, I find it quite interesting that we have so much volume flowing out of exchanges. You can see here the exchange volume momentum. This is looking at the monthly and the yearly. Massive, massive uptick of exchange activity. We'll see if this kind of plays out. Now, something that we'll touch on over the next couple of charts is that these big flush outs can be the bottom. Remember, bull markets, you don't see them until the very rear end. And while I don't believe that, I'm not certainly in no position to be calling a bottom at any point in time. I don't know how long this thing's going to take to recover from. But these big events sometimes just they're the catalyst that changes everything, right? You don't see companies and exchanges blow up at the top. You see them blow up near the bottom, right? Now, bear in mind, the analogy here is that if this is our Lehman Brothers moment, that happened in 2008, and the market didn't bottom until early 2009, right? March 2009. So, these blow-ups don't mean that they are the bottom. They certainly help precipitate them, that's for damn sure. And I listened to Nick Carter's podcast this morning, and they framed it pretty much exactly aligned with me. It's like, so how much worse can it actually get? Really? Like, what the hell is going to happen? If Binance doesn't blow up, it can't get any worse. It just really can't. The amount of mess that this has created means it probably can't get too much worse. Anyway, there's something to it, but we'll see. Now, this is an interesting chart. This is looking at the average withdrawal price by year. This is kind of like the dollar cost average. Where is your cost basis on average from what class you're in? And realistically, this blue curve here is 2017 plus, and I'm talking about January 1st, 2017 plus. 2018's got minced. Everybody is underwater except for people who've been dollar cost averaging since 2017. Their cost basis is down at 15,000, so they're not far from being underwater. And the all-time average price is 10,800. I looked at the adjusted supply and profit. 29% of the supply that's younger than 7 years, so basically 29% of the real supply is is in profit. Like 71% of the supply is underwater right now. This is the worst, lowest, most angry, savage bear market we have ever seen, ever, by an order of magnitude. It's unbelievable the amount of losses that's happened this cycle. It really is gargantuan. Anyone who hasn't sold through this at this point in time, bloody hell, what a set of resilient people we have left. Bodes very well for Bitcoin in the long term, but man, have we paid the price. I won't touch that one. That's kind of irrelevant. Whales. So whales, yellow curve is the 2017 since the start of Binance whale realized price, withdrawal price, also now underwater, 17,800. Whales underwater. I mean, far out. Everyone is just absolutely and totally minced. Now, what is quite interesting is the whale curve. See how this is starting to curl over? There was inflows over the last couple of days, but man, they're actually starting to reverse back down and seeing more outflows than not. Let me just, while I'm here, let me go to this entity balance change, because I think this might be an interesting one just to kind of add into the mix. Again, I really want to just try and give you a really comprehensive view of what's happening at the moment. Again, we've got the data, and we'll be monitoring this stuff over coming weeks, because obviously this is a dramatic and bizarre situation. None of us have been here before, so let's just try and explore as best we can. Now, remember, we saw that coins are coming out of exchanges, so we know that most of these are going to tick up. And to be honest, I don't think that's a bad sign. I think that's a good sign. I think it shows, people would rather withdraw their coins than sell them, which is kind of remarkable when you actually think about it. It'll probably precipitate a few more bank runs, but we'll see. Shrimp seems like their balance is actually ticking higher a little bit. Same for crabs. Quite a few crabs, actually. I mean, we're seeing a non-trivial bounce higher in this thing. Let me just zoom in on like a 2-year basis here. See if we can get it. I mean, you can see it. Look at this thing. It's bloody hockey sticking higher. We are seeing a huge amount of shrimp and crabs sucking their coins out of exchanges. Get me out. I would rather hold my keys, right? I would rather hold my keys than let these exchanges blow up on me. Fish and shark. Look at this. I mean, this thing is just tearing higher. It's quite remarkable. So we are seeing people taking custody of their coins. Now, let's look at our friends, the whales. Now, these guys remain, I mean, they've essentially flattened out over recent weeks, so we'll pay attention to see what the whales actually do over the coming, little while. It's not the worst thing to see. People are certainly taking custody of their coins, which is not a bad thing. Miners. Now, these guys, my lord, I would not want to be a miner right now. I expect these guys to be playing some serious sell pressure. You can see that their balance is declining. This is at 83,000 down to 76. I mean, the miners are just, oh man, what a place to be. These guys are so underwater. It's unbelievable. The fire sale that's coming for miners is out of this world. They are in so much trouble. Now, this is not a bad thing. It's just sell-side pressure, right, for treasuries. They're going to have to sell it. There's nothing you can do about that. In terms of protocol safety, difficulty will adjust. Blocks will come in. ASICs will get redistributed. I'm not concerned about the technical side of things. We just got to consume all these coins. It's just that simple. Miners are going to sell them. We've got to pick them up. That's it, right? Hodler reporting for duty. Now, on the stablecoin front, this is one that I actually think should be paid attention to. Now, you will be able to see a good chunk of these metrics on a free Glassnode account. Again, these are all preset dashboards, by the way. I mentioned before that we've kind of rolled these out, and they're designed to be used, right? They're designed so that, because I'm going to use them because that's how they've been set up. Anyway, so you should be able to see most of these. What I'm looking for here, if I'm a US institution, hedge fund, trading desk, whatever, and I've just seen what just happened with FTX, I'm going, oh man, get me out of this market right now. Those coins, there's a high probability they're going to have a lot of USD, right? USD denomination. They're probably going to be swapping it from Tether to whatever it is, to Tether or USDC, sending it to Coinbase and getting out. I saw the other day, it's just another one of those things. I was trying to fall asleep and Tether starts, de-pegging in inverted commas. By the way, if Tether doesn't blow up in this whole thing, Alameda was the by far largest customer of Tether. Now, I don't believe actually that there's a systemic risk here with Alameda blowing up Tether because they exchange USD. Tether takes that USD, gives them tokens. If Alameda goes and spends them all and puts them into a hole, it's not Tether's problem. Who cares? So I actually don't think that Tether is exposed here, which is quite remarkable. I saw a headline that they rejected SBF to try and bail them out. And if Tether doesn't blow up right here, those truthers are on the ropes, right? And again, I'm not a Tether bull, but I'm certainly not a Tether truther. I've seen it survive too many bear markets to be. There's some shady stuff over there, but man, they just don't die. Now, a couple of trends here. Again, I'm bringing it back to that. I'm a US institution. If I'm going to get money out, I'm going to be selling Tether, whatever. I'll take a 2-cent discount. Just get me out of this market. So what I want to see is redemptions. Well, sorry, I don't want to see redemptions. If I do see lots of redemptions, that's telling me that people are capital exiting this space. A lot of it will come out of USDC, which is here in the blue. You can see USDC is on a pretty significant downtrend. Binance USD is picking up. This doesn't surprise me because I think that Binance is going to really push that to start divesting from Tether. A very clever move on their part. So look, I'll be paying attention to what's going on with the macro stablecoin flows because I think that will represent capital outflows or inflows. I strongly doubt we're going to get capital inflows, but not going anywhere and being stationary is not the worst thing. And that's pretty much where we're at the moment. We're kind of at neutral. Let's see how this plays out. But certainly if we get large capital outflows, I wouldn't be surprised. A balance change of like 10 to 20% down wouldn't surprise me. More than that, yeah, that's bad news. Stationary is bullish, in my opinion, because that's capital that's deciding to not leave. We're kind of at the position now where bullish right now is the market not imploding. That's a good sign at this point in time. If the market doesn't leave and doesn't just capitulate out and say this is going to zero forever, that's a good sign at this point in time. That's how bad I think things are. Ethereum market cap is now back below the all stablecoins market cap. That kind of puts into perspective how dramatic this has been. Ethereum is now worth less than the top 4 stablecoins. Pretty tough. Anyway, that's kind of it on the stablecoin front. So look, paying attention to these two, seeing what's going on in terms of capital outflows. That's really what I'd be paying attention to. Now, getting into the Bitcoin stuff, right? What are we looking for here? Well, on spending behavior, I'm looking for capitulations. I'm looking for how much do people get fleeced and minced. How much capital flowed out of the system, did Bitcoiners panic, and then we'll look at long-term holders to see if the long-term holders panicked and sold. Now, you can see here that this looks like I'm not going to say capitulation, but it's certainly an uptick on the realized loss. Let's just jump in on a 2-year basis. So you can see that we had an uptick, obviously. This was realized loss 670. Hang on. Sorry, I'm just going to do, this is really annoying. Let's jump in here. $810 million, right? Big money. Nowhere near June. Nowhere near lunar collapse. Not even back here in January, right? Not even close. I mean, it's big, but it's not big. So that tells me a bit of information. That's kind of saying that of all the money that's moving around, it's actually not that significant. I'm kind of a bit surprised. Kind of shows it's probably not too much capitulation going on, actually. You can see it in our net realized profit and loss. It sure shows up, right? You can see the magnitude of this thing. It's non-trivial, but it's also not the largest we've ever seen, right? So clearly we've seen capitulation in terms of volume, 1.9 billion on total. So if we actually sum up all of the realized loss during this period, $1.9 billion has flowed out. It's pretty significant. And it kind of shows, I mean, you know, it is comparable to our previous capitulations. We will see if this is a sustained event or whether this is just kind of a major flush out. See how that plays out. We could probably leave that guy. On the adjusted SOPA metric, pretty significant on a percentage basis. So what this basically means, and by the way, in the video I did for Glassnode, you'll see that a lot of these coins came from the recent trading range. A lot of it was short-term holder coins, actually. We didn't see a lot of long-term holders lose faith. We'll get to that, obviously. But those who were spending were locking in pretty significant losses on a relative basis. So again, there's evidence that we have a capitulation that's in play here, which is, again, you kind of want to see that. You need to flush these folks out. In terms of the spending volume that was going on, we can see there's been a bit of an uptick of these older coins. These are coins older than 6 months. Let's just jump in on a 1-year basis for both of these and get nice and close. You can see here's that short-term holder pickup, right? We've got quite a bit of short-term holder volume, and this is the vast majority of it, right? We've got about 500, 500,000 BTC flowing around from short-term holders. And if we look at it on the long-term holder perspective, coins older than 6 months, we're talking about 15,000. So, you know, 500,000 versus 15, 16,000, completely different ball game. And you can see it's not quite as large. I mean, here during these capitulation events, we're talking about 35, 25. So it's still significant enough. But 15,000 BTC, yeah, that's clean upable, right? That's not the worst thing. What we don't want to see is this turn into a more significant trend. That would be no bueno. And just to kind of put into perspective here, this is our, dormancy. So this is the average age per coin moving on a momentum basis. Now, typically speaking, you start to see older coins getting spent in a bull, so the monthly is higher than the yearly. During a bear market, it's the opposite. You can see that this was a non-trivial spend, right? During this whole sell-off period, it's been a non-trivial spend. So, that is kind of more capitulatory than not. You can see that we do tend to get these bursts higher. Here's the capitulation event in 2018. You get this burst higher. So again, it's going to signal both bull markets, but also capitulation events when you're seeing long-term holders truly getting flushed out of this thing. And same for CDD. So it happened, but it's not yet what I would call a trend. We saw some long-term holders panic, which is the expected result. I'm not yet convinced that this has been you've got more coins coming out of exchanges than not. there's been lifespan spent, but it wasn't exactly a full-scale trend. We'll have to wait and see if this picks up and stays there. So it's kind of an early sign, but I'm not actually too concerned, surprisingly enough, with the long-term holder behavior. So looking at that on a much, literally long-term holder basis. So here's their full data. Let me zoom in on like 2 years. You can see here, here's that 15,000 BTC. So it's not really, I mean, it's obviously a delay to this, right? This thing's been on an uptrend. It's obviously a kink, but we'll see if this actually picks up and keeps ripping higher. That's what you want to see. A continued sideways or downtrend here would not be my favorite thing to see. I need to spend a bit more time just kind of assessing where these coins were and whether we expect this to keep going higher. I think I do expect it to keep going higher. So we will pay attention and just see if that does. We can leave that. Now, this is an interesting one. So this is long-term holder spent price. Now, what this is basically doing, the blue curve here is showing the average long-term holder acquisition price. So look at all the long-term holder coins. What's their current holding price? Unspent. Red is the spent. Of all the coins that were spent that day, what was their cost basis? Note how this declined significantly. This is what I was saying before. Those long-term holders that spent, the higher this is, the more that the long-term holders are spending coins from higher levels. They're literally capitulating out coins with a higher cost basis. Here, lower cost basis. This is basically saying that most of the long-term holders were of a lower cost basis that was being spent. So what we're basically seeing is that coins that were acquired down here at the average price of, what is this? 30,000. So 31. So 31,000 was the average price of long-term holders that were spending, which is not 50,000, right? So what we are seeing is that capitulation of that lower cohort, right? Now, again, I think that the long-term holder cost base will be somewhere in this 30,000 range right before the June sell-off, if I'm not mistaken. I think that would be, could not be. Anyway, it doesn't matter. Either way, we're seeing, and you can see the same thing during capitulation here in June. So again, it has a lot of signals. Here it is again. These big drops lower in the May sell-off in 2021, March 2020. These large significant dips lower is capitulation style behavior. Folks who were, even with a lower cost base, just get me out of that 10% loss. Just please get me out of this thing. So that's what we're generally seeing. Probably leave those. In terms of the overall capitulation potential, they still, both their spending and their unspent. So basically, everything that long-term holders are doing right now is underwater. They're just getting minced left, right, and center. In terms of the overall supply dynamics, so what we're looking at here is in terms of their BTC. So you can see here that we actually have the largest amount of coins in loss in history. Almost the largest long-term holders in loss, pretty damn close. Short-term holders, most in loss. Now, the other thing, that this is the one that I actually found the most interesting. On the right-hand side here, this is long and short-term holders in profit. Now, this drop that we just had is well and truly below the 2021 cycle, right? Obviously, because we're below 20,000. So note how long-term holders in profit traded sideways. Only short-term holder supply ticked higher. This actually looks like all of our previous capitulation levels. Long-term holders in profit are essentially flat because it includes people who are from the previous cycle only, right? Everyone else who's a long-term holder in this cycle is well and truly underwater. So thus, we're only looking at short-term holders in loss. And you can see this thing start to really bulge out towards late-stage bottom. So again, I mean, man, I'm going to shoot myself in the foot here. Even though FTX is an absolutely horrendous, shocking thing that's probably going to set this industry back sometime, it also kind of looks like a bottom. I mean, again, don't hang my hat on it. We have to really watch and see how this plays out. But man, it's got a lot of telltale signs of it anyway. We'll see. So the SLRV ribbons is basically trying to look for when do you have a lot more short-term momentum versus longer-term momentum in terms of coin spending. We're starting to get a tick higher. Now, again, as I said, these bottom formation periods, sometimes you need that catalyst, that event where it's like it literally can't get any worse. I mean, if someone has a case, aside from Binance blowing up, which I don't think is going to happen, aside from Binance blowing up, what the hell could possibly happen to make this situation worse? I don't know. So doesn't that mean it can kind of only get better? Duration's still a big part of it, but man, it feels like it can only get better from here, seriously. And that's it, folks. So I mean, that's kind of what I'm looking at the moment. So let me just give you a bit of a snapshot into what my mind is thinking about in terms of the implications of this thing. So there's no question that this is going to bring in regulations hot, hot, hot. I don't think they're going to be good. I'm hearing rumblings that this bill that SBF was pushing is even not dead in the water and could still get pushed forward, which I don't think is very good for DeFi and all the rest of it. Um, Look, and again, I don't want to sound like a Bitcoin maximalist here. I think this is horrendous for tokens. I think it's absolutely horrendous for DeFi. I really do. The regulators aren't, and the politicians are not going to see the difference here. They are going to put FTX and crypto in the same bucket, and they're going to come after it. I think KYC is coming to every DEX you're on. I think KYC is coming to every lending protocol. Alameda was a huge market maker in both Ethereum and Solana DeFi. They're gone. Liquidity is going to drain out. Tokens probably aren't in a good spot. I don't know who's going to buy this stuff, to be honest. VCs, it's going to be very, very hard for traditional finance VCs. I mean, Sequoia is one of the premier VC shops, and they got burnt big on FTX, bigly. They're very, very, highly reputable. They just took a huge L and a big black eye. I think it's going to be very hard for VCs to find capital in this space. I think that a lot of the funding is going to dry up. I think we're going to see a lot of the deals probably fall through. I think we're going to see further bankruptcies. I mean, BlockFi is the news this morning, but I think that's kind of expected. All the voyages and stuff, they're done. There's going to be bodies that float up left, right, and center. If you have coins on an exchange, get them off right now. Don't dick around. Get your coins off exchanges. Seriously, get them off. It's just not worth leaving them there. It really isn't. So we're still going to see bodies float up from this whole thing, and whoever else had lending exposure. Alameda had huge exposure to this industry. I think we may well have added 1, maybe 2 years to our sentence in this bear market. That's kind of my just gut feel. I do believe we're going to see a rotation back to BTC. I think it's the only thing that has regulatory clarity. I just don't understand how anyone could own a token that isn't BTC at all at this point in time. I can't see a bull case. And again, I'll probably be proven wrong. I really will. I just don't understand. I don't understand where the bid can come from. I don't know where the VCs are going to come from. I don't know why anyone would invest in the Ponzi-nomics. I think the trust in this industry has been severely, severely impacted because the average person can't tell the difference between FTX and crypto. The average person doesn't realize that their crypto account, they just think that it's like stocks. So, big money got burnt on this. Big money's going to have a hard time allocating. Little money got burnt on this. They're going to have a hard time allocating. It's bad. So I think it's pretty bad. So, look, we'll continue to read this thing as it plays out. I find myself in this camp of the long-term holders and the hodlers. I'm not bloody giving up my coins. Forget that. And I'll take these cheap prices as long as you can give them to me. But I'm preparing myself for a long winter in terms of duration. Just got to weather this thing out. There will be opportunity down here. And I really do hope I'm wrong. And we'll see how this plays out. I remain optimistic because at the end of the day, I just don't really understand how it can get worse. I just don't. But there's no question that we are in the eye of the storm, and there's going to be. We'll have to see how the political and I mean, if you just think about this, SBF was, involved with all sorts of politicians. He was the second largest donor to the Biden campaign. I mean, those politicians are not going to be happy with this current scenario, and they're going to come in with a big ban hammer. So BTC has that regulatory clarity. People have just learnt the reason why you self-custody. People have just taken a huge black eye and an L. Lots of very large traders in this industry just took a very, very large L. It's going to take a while for that reputation to come back. So just prepare yourself. Just be aware of it. Now is not the time for leverage. We're going to have plenty of time down here. So you can be extremely patient. There's no reason to rush into anything at this point in time. If anything is, again, you can always reach me via DMs or comments or whatever. I'll get back to you as soon as I can, always. So if you do have any issues, let me know. Happy to talk through anything and anything in this industry. It's a game of survival. There is groundbreaking technology here, and it's going to change the world. And the thesis for BTC remains unchanged, right? It is the scarcest, hardest money that the world has ever seen. It provides optionality. It gives people a choice. It's global. It's scarce. It's got a reputation. It's secure. It doesn't have Ponzi-nomics. It doesn't have any of this shit going on. It is just raw, sound, hard money, and that's it. That's all it has to be. And there will be a lot of people in the crypto space rather than the Bitcoin space who took a serious black eye here. Because for the most part, Bitcoiners have a culture of self-custodying, and sure, they can be obnoxious and they can be a bit of a dick, but at the same time, they're not wrong in a lot of senses. Yes, they can be a little bit nasty, and they probably shouldn't, and I certainly don't condone their behavior in a lot of instances. However, I'm not far from a Bitcoin maximalist, and I certainly don't try to be toxic, so to speak. But a lot of this stuff is, I've been preaching for a long time. There's a lot of these things that are Ponzi schemes, and we really shouldn't be supporting them. So this is the cycle. It always happens this way. The market rotates back towards BTC, both on a cultural level and a capital level. Bitcoin will lead this market out. And there's no amount of Ponzi-nomics or anything else. The only thing that's going to fix this thing is time. And time, patience, and the hodlers will clean up this mess. It just comes down to how long it's going to take. So anyway, hopefully that was useful. I know it's a bit of a monologue, but it's just trying to get ideas out. And again, I don't know if I'm going to be right. It's just complete insanity out there, but hopefully that's useful. And as always, if you've got any questions, if you have any, happy to help in any way I can. Just ping me, you know where to reach me, and I'll see you in the next one. Cheers.